Friday, June 23rd, 2017, Monaco 64, home of alternative economics and contrarian views. So I'd like to do a follow-up on the precious metals market, gold and silver. A couple of days ago, did a video asking whether gold was bottoming in the short term, and it looks like it might be. The only problem I have with the technical picture for precious metals right now is silver. Silver looks technically doesn't look very good at all, of my experience for the last 15 years plus following precious metals, we need to see a strong silver market leading the way if we're going to see gold do really well as well. And I also like to talk about an interesting article I saw in Zero Hedge, and it's entitled "How Central Banks Intend to Fight Cryptocurrencies." I think it's an interesting subject. I still believe, and I might upset a few people, but I'm just being honest, I still think gold and silver are the ultimate store of value, and also ultimate insurance against central banking fiat money system, failure. I think cryptocurrencies are a great alternative to fiat money, central banking money, but you can't compare the track record of gold and silver to cryptocurrencies. Gold and silver, we've got thousands of years of track record. Everyone on earth knows what gold looks like, what silver looks like. Very few people still know about cryptocurrencies. Maybe in future cryptocurrencies will catch up with gold and silver. That's not to say that I'm not still involved in cryptocurrency, because I am, and I'm going to keep following them. But first, let's start out with a couple of charts. Gold and silver. Let's look at the... actually, I'm going to start with silver today. Usually start with gold, but as I think silver is in the spotlight, and by that I mean it needs to wake up, and like rally strongly and do something, because it's the technical picture is looking a little bit moribund. So here's silver chart going back a year. The black line there is the 50-day moving average, and the orange line is the 200-day moving average. Back in end of April, silver was trying to get back, the 50-day was trying to get back above the 200-day moving average, and it failed. And you can see how, these last 6 weeks or so, or almost 2 months, silver's been under pressure. The only good sign here is that we didn't make a lower low in the recent move down when we bottomed 2 days ago on the 21st of June. We didn't go below the May low, and that's a good thing. But we didn't go above the April high either when we rallied in the beginning of June. So what we need to see now is silver somehow get back above 18. That would be very positive. So that technical picture for silver, doesn't look very good. And until silver gets a bit stronger and moves a little bit to the upside, I think gold is going to have a tough time. So here's the chart of gold. Gold, we did cross the 50-day moving average, is still above the 200-day moving average, so that's a good sign. You see that trend line I drew the other day. It looks like it's held right now, and the 50-day moving average is basically at 1257, and this morning I think we've got up to 1258, and it looks like June 21st, which is by coincidence the longest day of summer in the northern hemisphere, might be the low for gold in the short term. So right now gold's trading 1256.80, up $6.50. The high's been 1258. Silver is doing fairly well actually today. It's leading the way higher, It's at 1675, up 20 cents, up 1.2%. The high's been 1681, so, and gold's up 0.5%. So that's a good sign there. So yeah, that gold chart looking fairly good. We want to see, so as I said earlier, we want to see silver start leading the way, being a leader in the precious metals, in order for gold to get out of this funk as well. And back to the article about central banks and cryptocurrencies. So it's entitled "How Central Banks Intend to Fight Cryptocurrencies." And it's an article by Louis Camaruzano of SMAU GLD. And he points out that there's a speech by the Bundesbank president or governor, Jens Weidmann. And the Bundesbank is the German central bank. It's the Deutsche Bundesbank. So Jens Weidmann is the head of that bank, and he's also part of the ECB construct. And I've read the article, and it seems to me that central bankers and the bankers in general seem to think that the reason people are getting into cryptocurrencies is solely for the efficiency and practicality of using it. That might be part of it, but I think the biggest part is more, philosophical. It's that people involved in cryptocurrencies want to be outside the corrupt central banking fiat money system. So I think, it says here in the article, Weidmann's conclusion, and he says, "My personal take on this is that central banks should strive to make existing payment systems more efficient and still faster than they already are. Instant payment is the buzzword here. I'm pretty confident that this will reduce most citizens' interest in digital currencies." I would say he's 100% wrong about that. He's got no clue. He doesn't realize that people are fed up, that a group of bankers that are politically picked and given power by legislation, that they're able to create wealth or something that represents wealth like money out of thin air. He needs to do a bit of homework. Herr Weidmann, muss mehr arbeiten. He needs to work harder, I guess, because that's not the reason people are going into cryptocurrencies. It's more the fact that we have over 700 cryptocurrencies. This shows that it's a free market construct. It's organic. It's not like to say that just by improving their systems, like digital systems, central banks, that they will destroy people's interest in alternative currencies is just like being delusional, in my opinion. So the guy who wrote the article, he says discussion at the end. We need to discuss, and I guess I'm doing that a little bit. And the first discussion question is, will instant payment system run by central banks render public interest in private cryptocurrencies irrelevant or keep them at the fringe? As I said, no, I don't think so. People are in it because it's private and it's a market currency. And the second question is, what if central banks create instant payment systems, but the public interest in cryptocurrencies does not abate? Yeah, I think, that will not happen. It will not abate people's interest in cryptocurrencies. And the third question is, he's wondering whether central banks will just completely destroy this banking system. And by that I mean all their agent banks will collapse and they'll just be in control from the center with their private, with their central bank digital currency. Well, that is possible. That that's one of the planks of the Communist Manifesto: complete centralization of the credit system. So, what better way to install like a new world order communistic system, where only the elites benefit and everyone else is like a slave? That could be their, intention, and If you look at England or the UK, I'm not sure how many banks there were 150 years ago in the UK, but there were a lot more than now. And nowadays, you only have a few big ones. You've got HSBC, Barclays, RBS, which is 2/3 government-owned, Lloyd's, Nationwide, Santander. You can count the number of banks that most people use in two hands, the fingers of your two hands. So if there is a next crisis, the UK banking system could completely disappear, and we could be left with a Bank of England running everything, and their own Bank of England cryptocurrency. So that could be their intention or their goal. We'll have to wait and see. I personally think that the system is doomed. The system that says that money has to be controlled by a few people that are given political power. Money should be something that's free for the market to decide what to use. Historically, of course, it's been several different things: gold, silver, conchas, shells, cigarettes, cattle, salt. So yeah, that's what I wanted to talk about. We need silver to move higher and keep leading the way higher for precious metals to wake up. And and I don't think central banks can fight cryptocurrencies just by providing a better, digital technology for their system. It's not what it's all about. The interest in cryptocurrencies. It's philosophical. People want to get away from Big Brother and their currency. So if you enjoyed this video, give me a thumbs up, share it far and wide, subscribe to my channel if you haven't yet. Watch me on steemit.com as well, steemit.com, and you can follow me on Steemit. It's a great platform based on the blockchain. I'll talk to you later. Bye.